Welcome to the debate. Today, we are diving straight into a really fascinating comparison that's emerging from the central London flexible office market. We've got two premium listings that I think force us to reconsider what value even means in commercial real estate today.
It's a perfect contrast, isn't it? The material gives us this almost perfect intellectual foil. On one hand, you have 25 Green Street in Mayfair, which is all about, history and prestige. And on the other, 30 Duke's Place in Aldgate, which is just laser-focused on high-spec functionality.
Exactly. And the core disagreement we really have to unpack is this. Does the prestige, the exclusivity of a Mayfair address, that W1K postcode, does that justify a higher per desk cost? Or does the operational utility, the comprehensive infrastructure in the city location, present a smarter value proposition?
Well, that price difference is the absolute core of it. We're talking about a clear premium. Mayfair is listed at £650 per calendar month. The Aldgate space, $575. I'll be arguing that the tangible amenities and, frankly, the superior functional design of the city location offer a decisive, quantifiable advantage.
And I stand firmly on the other side. I think the value that's inherent in the Mayfair location, in its very boutique atmosphere, not only justifies that premium, it almost necessitates it. That £75 difference isn't an expense. It's an investment in positioning.
I see why you'd think that, but let me offer a different perspective. We have to start with the idea of positional goods. That £75 premium for 25 Green Street, it reflects scarcity. It's an investment in an asset whose value is tied not just to its square footage, but to the fact that very few other firms can have it. The prestige of Mayfair is a strategic tool that the Aldgate property, regardless of its infrastructure, it just can't replicate. I'm sorry, but I just don't buy that. Let me tell you why. Prestige is nice for a letterhead, sure, but it has to be weighed against tangible operational costs and, frankly, staff welfare. I mean, we are in 2024. While Mayfair offers this, historical cachet, the Aldgate space offers demonstrably superior operational support for a lower cost. We're looking at concrete benefits here: 6 showers, dedicated event space, better transit links that directly impact the productivity of a modern workforce.
But let's look at the evidence of the location itself. The listing explicitly calls this prime Mayfair. It's surrounded by the highest-end retail, high-net-worth advisory services, restaurants, private banking. Its proximity to Bond Street and Marble Arch puts it right in the epicenter of luxury commerce. And beyond that, the property itself is, it's pretty modest, 7,000 square feet, defined as a boutique office space, accommodating only up to 25 staff.
And that small scale is exactly why I question the cost. Why pay £650 for what seems like limited physical infrastructure?
Because the scale suggests exclusivity. This is a quiet, controlled environment that's, designed for discretion. It's intended for a very specific type of tenant. A wealth management firm, maybe a boutique M&A advisor, where the client waiting area and the quiet hallways are half the pitch. The value isn't functional, it's relational.
That's an interesting point, though I would frame it differently. While Mayfair is trading on reputation, Aldgate, which is also prime city of London, by the way, it provides maximum functional utility for a business that actually needs to operate and grow. I mean, just look at the specific infrastructure listed. 6 showers with changing rooms. That shows a deliberate focus on the needs of a modern commuter, whether they cycle or run to work. Dedicated event space, social areas. That suggests capacity for team collaboration.
You are focusing very heavily on these physical amenities.
Because they're tangible. They are measurable factors that reduce friction for staff. Aldgate specifies 3 well-appointed meeting rooms available to hire by the hour, half-day, or full day. And we're also looking at a stunning, newly refurbished design. Highest specification, the listing says, with this impressive reception area with copper detailing. So you get high-end design plus robust infrastructure, all for £75 less. The city location just offers a maximum return on utility.
Okay, so let's address this £75 differential directly, since it really defines the debate. As I said, the difference reflects positional scarcity. For a firm whose clients are, intrinsically linked to the luxury sector or high net worth individuals, the Mayfair location is a critical strategic filter. The very presence of a manned reception and 24/7 access ensures the high service standards expected of that W1K postcode. It's a level of refinement that, well, it often transcends the need for excessive communal infrastructure.
But the relative cost of the Mayfair space isn't supported by superior functional assets. Think about risk. The city space includes on-site security, a feature that isn't even specified in the Mayfair listing. You combine that with the 6 showers and the dedicated phone booths, and it suggests an offering that's much better adapted to modern, flexible working patterns, where staff welfare and security are, while they're paramount. If Mayfair's target tenant is so high-end, surely security should be front and center.
I'd argue security is inherent in that environment and the bespoke nature of the offering. But let's talk about the density issue again. The Aldgate property has to offer 6 showers because it's a 6th-floor building, which suggests a much higher density of tenants. Mayfair's 7,000-square-foot space only houses up to 25 staff. The sheer lack of volume almost eliminates the need for those large-scale commuter facilities.
That argument assumes that the Mayfair plant staff don't live outside Zone 1 or want to maintain a health-focused routine. I maintain that the Aldgate space caters better to the actual needs of a dynamic workforce. The listing even calls it a creative serviced office, with genuinely practical features like bike racks and, yes, those 6 showers. For a modern business, especially one scaling up in the tech or legal sectors in the city, the ability for employees to cycle to work, get cleaned up, and then use a dedicated phone booth for a private call, that's a measurable daily benefit. It impacts morale, it impacts retention. That seems far more valuable than Mayfair's only detailed amenity being a lounge area with a high-end coffee facility.
I'm just not convinced by that line of reasoning because you're comparing staff utility with client perception. They're two different things. That high-end coffee facility and lounge in Mayfair, they aren't primarily for the employees. They're designed to facilitate informal client meetings and to reflect a very specific standard of corporate polish. For a firm with up to 25 staff, that simplicity and exclusivity is exactly what they're paying for. They're buying an environment that filters out the noise and volume that would necessitate 6 showers in the first place.
But this reliance on intangible polish ignores operational reality. If that small team needs to host a significant board meeting, they are constrained by the single small meeting room in Mayfair. The Aldgate listing confirms dedicated event space. We're comparing comprehensive infrastructure built for expansion against an assumed prestige designed for very limited interaction.
Let's pivot from internal infrastructure to external connectivity then. Mayfair is near major transit hubs, Marble Arch and Bond Street, providing excellent West End access. That's crucial for meeting clients in media, luxury retail, and the arts.
I come at it from a different way. I mean, while West End access is fine, the Aldgate location has superior transit proximity to the economic engine of London. It's a 2-minute walk to Aldgate Station. It's within 7 minutes of major city stations like Liverpool Street. For the vast majority of flexible office tenants, financial services, insurance, tech, that immediate connection to the city's infrastructure is arguably far more critical.
That may be true for firms tied strictly to the square mile. But the Mayfair address provides access to a different, perhaps more strategically valuable ecosystem. I mean, the concentration of international family offices, hedge funds, and bespoke advisory services around Bond Street is unique. The value there is external. The city is about volume and speed. Mayfair is about discretion and strategic depth.
Discretion isn't a functional metric. Efficiency is. If we look at the core operational terms, both properties offer fully furnished space, IT and telephony with fiber optic confirmed for Mayfair, and all-inclusive flexible terms. So there's parity on the core requirements. If both places offer high-speed internet and desks, why pay the £75 premium for fewer amenities?
Because that parity is only on the surface. And this is where the exclusivity justifies the cost. The Mayfair terms explicitly state the broadband and telephony is tailored to suit individual business needs, which suggests a highly customized, maybe even dedicated service. You're buying a service-level agreement that aligns with high-stakes financial work, not a standard package shared across 6 floors.
Okay, customization is valuable, but the sheer quantity and availability of functional space in Aldgate is a massive advantage for day-to-day scheduling. Aldgate's robust offering has 3 meeting rooms. That gives tenants far greater flexibility and capacity than the single on-site meeting room in Mayfair. A 25-person team in Mayfair is going to hit bottlenecks immediately.
The boutique model accepts that limitation. The workflow is different. They might use the high-end lounge for informal chats, or they'll take key clients to one of the surrounding Michelin-starred restaurants. That's part of the Mayfair service environment. The city space, by contrast, is designed to keep everyone inside and maximize desk time.
And that is precisely the superior value proposition. Maximizing throughput and providing operational resilience is the true premium in the flexible office market today. If the Mayfair tenant has to rely on external facilities for basic functions, they're introducing hidden costs that the £650 price should be mitigating. The Aldgate location internalizes those necessities.
That internal focus sacrifices the external signal. Mayfair secures an invaluable, if intangible, asset, positional advantage. The debate really illuminates that value isn't solely derived from the number of showers, but from the strategic context of the address itself. For any business where client perception dictates success, that context is everything.
And conversely, the Aldgate property at 575 demonstrates a crystal-clear focus on modern, efficient operations. It offers concrete infrastructure, security, 6 showers, event space that maximizes utility and staff comfort for less money. The comparison shows that the highest quality amenities are not necessarily tied to the highest price point. They're tied to a clear understanding of what a modern workforce actually needs to function well.
Ultimately, I think we can agree the decision hinges entirely on the tenant's specific commercial priorities. It's about whether a firm prioritizes the strategic status conferred by a prime Mayfair address or the comprehensive, cost-efficient operational support of a prime City of London location.
Exactly. Both are credible, evidence-based choices emerging from this material. It just shows that defining premium value in London's office space really requires assessing whether the currency of your business is status or if it's operational resilience. And there's always more to explore there.